Mazars is a leading international audit, tax and advisory firm aspiring to build the economic foundations of a fair and prosperous world. Founded in Europe, we are now present in over 90 countries and territories, with more than 42,000 professionals, over 26,000 in our integrated partnership, and 16,000 via the Mazars North America Alliance, dedicated to helping clients make the most of business opportunities and operate with confidence. With teams based all over the world, we combine deep local knowledge and understanding with a global perspective. Operating as a united partnership with shared goals, values and service standards, we work as one team, delivering a rewarding experience and consistent quality across a broad range of services. We have the skills and the scale to serve clients of all sizes across all sectors, while remaining flexible, personal, and distinct in our approach. Every piece of work is treated with integrity, independence, accountability, and a social conscience. By combining quality, expertise, agility, and understanding, we provide answers and experiences that are right for our people, clients, and society.
When it comes to changes in fashion, we're, working on it. When it comes to changes in compliance, well now, we're really trending. Maybe stick with the suit, Earl. Introducing the latest creation from the people at DraftWorks. DraftWorks Cloud. We offer an automated, fully compliant financial statement and working paper solution that keeps you up to date with all the changes. Our simple-to-use, cloud-based platform guides you through the auditing process. Financial professionals get real-time engagement collaboration with unlimited users. We've thought about everything so that you don't have to. Accessible directly from your browser, create a new client, and just follow the process. Per engagement billing ensures you only pay for what you use. No more annual fees. Simply import your trial balance from any leading accounting package or Excel and get started today. DraftWorks Cloud, the leader in financial statement and audit compliance technology. Looking good, Earl. DraftWorks Cloud, a product of DraftWorks.
How SAIBA qualified accountants are becoming chief value officers. Traditional accountants focus on historical numbers, but this is so 1980s. Society wants value reporting. Income, expenses, assets, liabilities, as reflected in financial statements, are important. But what about real value, such as community, sustainability, human capital, and reputation? We need a value statement. SAIBA is developing accountants to become chief value officers that prepare value statements comparing SME performance to the United Nations Sustainable Development Goals. Chief value officers apply integrated thinking to show value for the SME, its owners, employees, suppliers, and society. The chief value officer starts this process when setting up the bookkeeping system and preparing financial statements. Each expense item is linked to a relevant sustainable development goal and reflected in a value statement as a checklist and progress report on core indicators such as tax contribution, reducing waste and energy, efficiency, buying and employing local, gender empowerment, and enhanced director accountability. To become a chief value officer that prepares value statements requires awareness, training, technology, and reporting software. SAIBA retrains SAIBA members as chief value officers and partners with DraftWorks to develop automated value statements to supplement traditional financial statements. Our partnership will minimize our own energy footprint and generate generational value as we automate value reporting.
What do our defining moments look like? Just like this moment right now. They look like pride after achieving that long sought-after goal. All the small victories along the way that didn't feel momentous until we saw them in the rearview mirror. They look like the courage it takes to take that first big step. All the times we fail and rise again. And without even knowing it, cultivating an inner strength that is contagious along the way. They look like the inspiration that comes from knowing that we are not alone. They look like the human relationships that give us wisdom beyond what data ever could. They look like the curiosity that comes from exploring, that allow us to create and contribute. They look like education that unlocks our full potential, using our knowledge for impact. They look like choosing our own definition of success, over hiding, over hustling, over pretending. They look like others showing up and recognizing our efforts after all the times we already showed up for ourselves. They look like being bold enough to be extraordinary. They look like you. Right now, right here. First, we help you see your defining moments. Then we help you seize them. We are the accounting body for everyone. We are the accounting body for you.
Who's the boss? I'm the boss.
Nah, I'm the boss.
He thinks he's the boss, but I'm definitely the boss.
Yeah, but I'm still the boss.
Taking control of business. I was born ready. Invoices sorted.
Expenses smashed.
You started when they said, I corner win. You fixed home haircuts and dye disasters. And with QuickBooks, you're in the know. Even when the world turns upside down, you dollar what you must to make that cash flow flow. Because you're small business tough with the advantage of QuickBooks. Save time with QuickBooks Smart, up-to-date business insights so you never have to slow down to make informed decisions. Learn more at quickbooks.co.za.
When it comes to changes in fashion, we're, working on it. When it comes to changes in compliance, well now, we're really trending. Maybe stick with the suit, Earl. Introducing the latest creation from the people at DraftWorks. DraftWorks Cloud. We offer an automated, fully compliant financial statement and working paper solution that keeps you up to date with all the changes. Our simple-to-use, cloud-based platform guides you through the auditing process. Financial professionals get real-time engagement collaboration with unlimited users. We've thought about everything so that you don't have to. Accessible directly from your browser, create a new client, and just follow the process. Per engagement billing ensures you only pay for what you use. No more annual fees. Simply import your trial balance from any leading accounting package or Excel and get started today. DraftWorks Cloud, the leader in financial statement and audit compliance technology. Looking good, Earl. DraftWorks Cloud, a product of DraftWorks.
I have a dream where one day each school board, church committee, policing forum, sports club, community group, NGO, association and political party branch will have as its treasurer a SAIBA designated accountant. In my dream, this army of SAIBA appointed treasurers will cover Southern Africa as a blanket of green, assisting with rebuilding communities affected by months of lockdowns, state capture and service delivery issues. As treasurers, our army of volunteers will have a big task, motivating and encouraging communities to rebuild, as well as keeping the books, accounting for income and expenses, calculating projections and improving systems and management. But more importantly, if you sign up to our army, you will be able to make friends and influence people. Imagine 10,000 SAIBA members servicing 100,000 committees and boards and the influencing power at our disposal. The books of Dale Carnegie, Jordan Peterson and Saul Alinsky will be our field manuals on how volunteer work can lead to dramatic changes in economic and social structures. Often it is these structures that prevent us from growing our firms or gaining employment, which restricts our ability to put food on the table and care for our families. In my dream, we can influence how these structures are made and used and co-build new ones that truly serve the needs of communities. The Practice Management Conference and Roadshow 2021 is the first step we have to take to follow our shared dream. We have to know how to manage effective firms, as this is essential to living our dream. Listen, learn and network with the presenters and experts, then join us on the National Roadshow as we meet with municipal and business leaders in our hometown, sharing our dream with them and deploying an army of influencers. Let's go forth and multiply.
Good morning, everybody. It's Nicholas van Dijk speaking, the CEO of SAIBA. Welcome to our mini summit on Section 18A donations and deductions. It's wonderful to have all of you present in the summit and giving us your time for 2 hours. I think the topic is valuable and also very relevant to each one of us servicing the social sector, including charities, non-profit organizations, and the like. It's an important sector within our economy. Without the social sector, which forms part of the 4 critical areas in our economy, which is government, business, labor, and then the social sector, we won't be able to function as a society. Our focus is many times on businesses and their contribution, and we often see government and their role, but what sometimes is hidden from view is this important role played by the non-profit sector. The sector is well funded from government. I once did an analysis very quickly about the percentage of the GDP allocated to schooling and social support services. And at that time, and I was speaking under correction, it was close to 60% of our whole tax budget. Now, our budget is quite a little bit more than 1.5 trillion a year that we collect in taxes. And then 60% of that is spent on these support services. So that is close to R1 trillion a year being spent that our government invests, and society believes that they should perform this necessary function. So what we do know from those numbers is that we can't tax businesses more to give more money to the sector. They're already getting the lion's share of the taxes being collected. The only thing that we can do is to make sure that the taxes that we do collect and the donations we actually make. I just want to remain on the first slide, please. As I give my introduction, thank you very much. So the only thing that we can do is to effectively manage money that we collect. From SARS collects this and then distributes it amongst the different departments, and a big portion of it goes to the Department of Social Development and it gets distributed, and many other government departments also have charitable departments or functions that support local communities, whether it's municipalities, Department of Health, a whole range of them. But what happens often, and well, I don't know often, but what gave rise to our presentation today was a discussion that was held between RCB, the RCBs and SARS, indicating from SARS' side, SAIBA as an RCB wasn't particularly aware of the scenario of MPOs being abused, either creating fake MPOs and then doing tax evasion via them, or for money laundering, or the problem of proper administration. So it might be a legal and valid MPO or charitable organization, but the administration is of such a nature that there's not enough evidence and proof that can be delivered to SARS that the donations actually received or spent for the intended purpose. So we then had an opportunity at RCBs to engage with SARS. We reread the interpretation notes related to Section 18A and had to come up with, and SAIBA made it the purpose of its own, to come up with certain proposals on how to improve the accountability of the sector. And also, I suppose, the backdrop to the whole discussion was the recent possible grey listing in terms of the FATF regulations that South Africa is subscribed to, focusing on anti-money laundering legislation. And when we did our research there, which we shared with you in your profiles, so after this event, the recording will be made available within your profile. I'll show you now how that works. And you'll also receive a very handy guide and document from the FATF on how the effect of money laundering within the MPO sector. So that's a good reference guide. So when we saw all of this and the size of the issue, we thought the best way to answer and to assist SARS, because that is our aim as SAIBA, is to assist SARS in the functions that they perform from a tax practitioner perspective. Society is made up of various organizations and structures. As I previously alluded to, there's government, there's labor, there's business, there's the NPO sector. And within those sectors, we find professional bodies playing a very important role, although it's not the major role. At SAIBA, we often say that we don't want to be leaders in the economy or in business. We believe we are supportive to business. And in that, and the sector, the NPO sector, and in that supportive role, we want to make sure that the tax practitioners, which play such an important role in society, and often a neglected role, we must say. We also can't understand, just like I'm sure many of you, why we can't have a more streamlined and a more cooperative relationship. Although it has much improved over the last couple of years, I think more can be done to place an emphasis on tax practitioners and the role they play. We would love to see, for example, SARS, when they have these billboards on the highways, I'm sure many of you have seen them, when they announce tax season and when they say why it's so important to collect tax, to mention maybe the tax practitioner, because we realize that most employees and all businesses at some point is touched by and supported by a tax practitioner. And this tax practitioner needs better systems, better integration with SARS. So we're not opposed to, or we're not a competitor to SARS. We're an important role player. And I've described now some background to our mini summit, what led us to this summit, the indication by SARS that there's a problem within the sector, the indication on the grey listing that I'm sure many of you saw in the papers. You can go and Google that and see how National Treasury is really now in a bit of a crisis moment and setting up the various departments and making sure that we can issue the reports required by international stakeholders on anti-money laundering so as not to get downgraded. And we find ourselves as representatives of tax practitioners playing that important role in supporting, because it is also not in our interest as tax practitioners if South Africa should get a grey listing. It increases bank costs, it decreases our ability to attract funding, and what that means is, in our world, it means less clients. Because if we don't get foreign funding, and if things get slower and more difficult to do, there's more red tape, then business suffer. And as I said, SAIBA believes that accountants and tax practitioners are servants of business. We do not believe you are a leader in business, and neither are we. We're standing in a long queue of supportive structures to make sure that business people and local municipalities are supported so that they can play their important function. But to do so, we again need support from government and SARS to fulfill this important role that we have. So then we decided the only way that we can truly understand what are the underlying issues and problems is to organize a summit. Now, the summit then is a new feature of SAIBA that we decided that if we want to play this transformative role in society, obviously in our limited scope, we're not a political party, we're not an economic movement, we are a very small player in a big economy, but we want to make sure that the role that we play very well. Because if there are, for example, 1,000 different organizations, I'm sure there's many, many more. Let's say there's 100,000 organizations such as SAIBA playing different roles, not necessarily in accounting, but all of these little structures make up civilization. So civilization in a modern sense consists of many substructures, of which SAIBA is one. There are churches, there are clubs, there are community organizations, there's businesses, small, big, large, medium, different forms and types. And so there's many structures within society, and each one, to paraphrase Jordan Peterson, which I'm a big fan of, he says 12 rules of life. One of them is, the first one I think is make your own bed. So before you want to change the world, just sort out your own affairs. And that is what SAIBA wants to do within the tax practitioner profession, to make sure that us as a profession continue to deliver on our commitment to society. And one of these are then the summit. So we decided to host a mini summit, bringing in SARS, bringing in an amazing organization as a representative of an organization receiving funding and deploying them within the sector, the gift of the givers. So we have currently, I'll introduce them now, a representative from SARS, the tax exempt unit, and a representative from Nedbank, because all transactions flow through banks, and they can give us a nice insight about how the system can be improved. And then also gift of the givers are the real heroes and champions, and organizations like them within society, preventing society from collapsing and falling over. And on the television, I'm sure all of us follow news. We've seen, we're all adults now, we've seen Libya, we've seen Afghanistan, we've seen Iraq, we've seen Syria, we've seen all these places in the world that, and many in Central Africa, there's still, I think that war is going on there for more than 30 years already. So there are states that's really, really struggling, and that fate that can befall a state can also befall South Africa, and we don't want that to happen. So we need the NPO sector, and we need the economy to fully function. But to make a proper and relevant contribution, we need to be practical, and we need to understand the various issues, and we can't figure them out ourselves. So we reached out to SARS and said, but please share with us what is the real concerns. If you can share information with us within obviously relevant parameters, we'll be able to design better processes so that we can go to the members and say, guys, these are the issues. We need to stop this. So at some point, maybe example, you're going to hear today, there has been an accountant involved or a tax practitioner, either being, I think the word I used was having inertia or a disinterest in what's really happening within his clients' affairs. And then just with not giving enough attention, would file a return without doing a proper know your client analysis. So we decided that SAIBA, there's practical things that we can do. And we can, because we're a standard setup, we can tell members, this is how we want you to treat NPOs. This is the damage it causes to our economy. This is what SARS is struggling with. And this is how I think you can fix this. And the reason we want you to do it is we don't want SARS to do it. The moment SARS increases their regulatory scope, then life becomes very difficult for all of us. So they will have to do it and prevent tax abuse and evasion. But sometimes it's better if society, us as part of society, come up with our own better structured rules and not assist these clients that are creating fake NPOs or not maintaining the records that they should. And we can fix it. It can be an eloquent solution. It can be a very cost-effective solution. And it will improve our relationship with SARS and just make your life generally better, because then SARS can deploy more energy in assisting you when you're in your administrative functions, rather than making new rules and checks and balances to prevent fraud from happening, which just makes the whole system very cumbersome. So in that way, we can support the whole process of preventing tax abuse. And then let me then start with by that way of introduction. Again, welcome. My name is Nicholas Hamwyk. I'll be your MC, host, and a little bit of a presenter within the session. We're going to talk a little bit about SAIBA. The session starts from 10 to 12. It'll be a quick, that's why we call it a mini summit, but we want to make it very practical. It's being recorded, and there's some additional reading material that will load within your SAIBA Academy platform. So let us then go to the next slide. So this is just some administrative requirements. There's a chat function, obviously. I think most of us now are familiar with Zoom. We won't be answering questions whilst we're presenting. There will be some time left at the end, about 10 minutes. You can either chat, do a Q&A, and as I said, the recording will be made available. It's there in the bottom end of your screen. Next slide. So this is where you will obtain your CPD certificate. We said that there will be 2 hours allocated. You can, after this event, you'll log into your SAIBA Academy profile, click on My Dashboard, go to My Courses, select Start, next to the SAIBA Summit, and then complete the questions and quizzes. So SAIBA still uses an input-based approach or method for CPD. So complete the questions based on the presentations today, and then you'll receive your 2 hours of CPD, and you can send any queries to academy@saiba.org.za. Next slide, please. Any further conversations you want to have with SAIBA and how to join us? We have a slogan at SAIBA. We say with SAIBA, anyone can become an accountant, because we truly believe that with the right exposure and support and commitment, obviously from the applicant side, anyone can be an accountant. Accounting is very pervasive within society. Every day somebody, all of us, does debits and credits, whether it's in a little small budget of your own personal finance or whether it's running a big listed company. Accounting is really pervasive. And SAIBA then, when we realized this, we suddenly realized that accounting isn't only for the purist or the classical type of accountant. It's actually much wider. And if we can increase the capability and capacity of everybody in the country being able to run their affairs much better when it comes to debits and credits, then everybody will be more accountable and they'll actually know what's happening in their finances. So you can send us an email, membership@saiba.org.za, or go to our website, saiba.org.za/join/membership. Next slide. This is our designations. There's quite a few of them, and we're very proud of them. We cover the whole finance department. You can see we believe and view ourselves as the custodians of the finance department. That's the area in which we play. So it's huge amounts of and volumes of transactions every day is accounted for by accountants at various levels, whether they operate at a bookkeeper level, financial administrator level, financial accountant, financial manager, or CFO, or whether they run their own practices. SAIBA as a home has a designation for you. We've linked and aligned these to the IFAC education standards. We've embarked on a exercise with industry and academia to make sure that what business and government and the sector, the social sector wants their accountants to perform, and the competencies are fully reflected in what academia produces. So these are solid designations based on quite comprehensive competency frameworks, yeah, it just reflects the role accountants play within society and within business. Next slide. So now we're moving to the formal part of our presentation. These are your presenters, Nicholas van Wyk, CEO of SAIBA. I'll be doing your welcome and introduction. Then I'm going to hand over to Goloko Sekosana from SARS. He's the specialist, strategy and advisory with SARS Tax Exemption Unit. We just want to thank SARS for allowing the presentation to happen. We know that they are quite popular, and even today, the unit has multiple presentations all over the country. And thank you, SARS, for being an example of what state departments should look like and how they should work. And then we're very honored to have Mohammed Suleiman from Gift of the Givers Foundation. He's the Executive Director of Operations. Now, from our perspective, Gift of the Givers is really setting the standard for all NPOs to aspire to. So we believe that each one of us should have a hero or a champion that you aspire to be. Somebody has to set an example, and we just thank you, the Gift of the Givers, for the good work that you guys are doing, and your ability to reach so many people across so many fronts, all the while maintaining your own proper accountability. So thank you very much for participating. And then from the banking perspective, we have Rian Beekman. He's the Nedbank Group Risk, Group Financial Crime, Forensic and Security. And you can see from the type of presenters what we are trying to achieve with Summit. Banks are an integral part of South Africa's anti-money laundering initiatives. Then we've got the stakeholder as a representative from the social sector, Gift of the Givers, and then we've got SARS. And lastly, we've got our own tax practitioners represented. So we believe that this is a dream team of organizations that if we can align ourselves better, cooperate better, integrate better, share better information, we can be a very strong force and a very strong defense mechanism against fraud and tax evasion within the NPO sector. So again, thank you, my fellow presenters, for participating in today. Next slide, please. There's our agenda. I'm busy currently with the welcome and introduction. We're going to then move over to the representative from SARS on an overview of Section 18A, then handing over to Mohammed on the management of those transactions, because it can be complex and detailed. And lastly, we're going to have a fraud in business and tax perspective from Nedbank. And it'll take about 2 hours, each presenter about half an hour, and at the end there'll be a Q&A. Next slide. All right, I'll start with the introduction. Who and what is SAIBA and how do we see the world? Next slide. So SAIBA has more than 10,000 members, established in 1987, and 5,500 designation holders. Those are the designations I previously shared with you. And what we've done is, besides the designation, we realized that members want to specialize in certain areas. After they've maybe ran their practices for about 3 years, they start specializing. So we are building specialist licenses in different areas of accountancy and tax. We are recognized and somewhat regulated by 9 pieces of legislation and regulations. For example, the Companies Act, the Close Corporation Act, the Home Affairs Act, the National Lotteries Board regulations, and the list goes on. So we have a very good relationship with all these departments and have an important role to play in the administration of legislation when it comes to who reports financial statements or if entities have to report annual returns or annual financial statements to various departments. We've got 21 staff members and a host of consultants supporting us. We are active across South Africa, not only in Gauteng, and active in 4 countries. We have a major expansion into international areas, which led to a change of name application that we submitted, and that was approved by our board, our AGM, and then CIPC to better reflect that we're no longer just limited to Southern Africa. We've actually much expanded now, and we provide designations across the board. Our designations are, the highest designation is our CFO designation. And just to give you an example of the approach that we use is the underlying qualification for a CFO designation is our BCom, then adding an honors or the CTA, adding an MBA, and then requiring 8 years of total years of experience. Most of that would have been post articles. And then after that, there's an assessment that we perform with qualified and experienced CFOs assessing the candidate. And then if they pass that assessment and they can provide evidence of all their qualifications and experience, we will then issue our certified financial officer or CFO SA designation. And we use the similar structure and format for the other designations. And with that, then we are taking SAIBA Global, and then has changed our name to be the Chartered Institute of Business Accountants to better reflect this international expansion. We've registered with SAQA, all our designations, and our body ourselves, with CIPC, SARS and RCB, Home Affairs, Department of Justice, and many, many more. We're a member of PAFA, and then IFI, as well as the CFO Alliance. That is our international partners that gives us access to 22 countries and CFO associations. And we annually host a CFO Summit, and this year it's in Capri. Many of you would have seen those invitations. Next slide. So I've already alluded to this. We believe in an open access accounting model. I think that's what makes SAIBA different from the other bodies. Realize that the accounting field is like a catchment area. Eventually, everybody ends up in accounting or passes through accounting. There's many teachers that end up in our industry. There's many psychologists, many doctors, many engineers, and obviously many BCom type of accountants. So we want to make sure that we provide a home for all types of persons. Doesn't matter your background. Why would we prevent you from starting a career in accounting just because you didn't do a BCom? If you look at the setup of business and finance departments, the employers take accountants with any type of qualification. Our role is just to make sure that once a person starts performing this accounting function, that there is a pathway for them to professionalize. And that is why the SAIBA then comes in, partnering with employers to make sure that we support their employees in their career choices. So we don't want to lead the career choice. We want to support people in whatever career they found themselves in. And in our case, would have been accounting. Next slide. I've mentioned we're a SARS recognized RCB, and we will provide tools for accountants that want to improve their choice, their chances of success. You're welcome to go to our website. There's quite a range of support that we do provide on getting a job, being promoted, supporting SME clients, providing for their families in different roles that they perform as accountants. We have our 4 brands, SAIBA.org.za, but then also Accounting Weekly, CFO Club, as well as SAIBA Academy, which is our CPD platform. Next slide. So accountants play an important role within society, and we thought that it's just good to have a list of the things that they do. It's basically covering the whole accounting cycle. All of you would be familiar with this. And our support structures, especially with SAIBA Academy, is focused on each of those areas in which you have to perform as an accountant. So we have more than 1,000 CPD events loaded on different formats and product mixes that you can subscribe to, from as low as 200 Rand a month. We really want to make it affordable, up to, well, a few thousand Rands per product, if it's a flagship product like a license and so forth. Next slide, please. Again, there's a summary of our designations: the BA, CBA, CFO, and BIP. We're expanding these now into bookkeepers and financial administrators. And this slide just briefly then identifies to which job category each designation applies. And on top there is our formula that we use at SAIBA. So we believe a qualification plus experience plus an assessment must lead to a designation, but that's not the end of the story. After that, you need to maintain your professional position and expertise, and that comes through CPD and specialist licenses. And you can see just again, each designation has a group of accountants that it supports and gives meaning and making life worthwhile and something to aspire to. Next slide. So let's then again to section 18A, the summit. $96 trillion is the world GDP, and each and every dollar in the world at some point goes through the fingers of an accountant when we capture this data into a set of financial statements, whether it's the revenue or whether it's the expense items. So accountants are crucial for the proper functioning of the world economy and making sure that that 96 trillion is spent adequately and not part of a money laundering exercise. So how SAIBA then wants to participate in this 96 trillion is by creating an army of volunteer accountants with early detection tools needed as model agents and as a first line of defense. So besides supporting business, we do have an important function with regard to supporting SARS. We file those, we prepare those financial statements, we file the tax returns, we ought to know what's in them, and we ought to verify those transactions when we do the bookkeeping support for our client. And given our own history in South Africa, the terrible news and information that we all received through the Zondo Commission reports, I've read some of those reports. Do yourself a favor, read through them. It's really horrific what happened. We went through a whole ESCOM debacle. There's a world recession, and so the bad news carries on. So SAIBA then thought that the best way to respond is not business as usual, but just to create a concept of a volunteer army of accountants that can be deployed, first of all, on a voluntary basis for those NPOs or businesses that really struggle, so that we can strengthen them and have a sustainable and long-term client base. And the best way we could do that is by coming up with the idea of a volunteer army. And next slide. So this is then the World Giving Index. It shows in a very high-level format the amount of contributions received and the percentages on charitable giving and how South Africa relates to the rest of the world. There's a stat that we found in preparing for the slides that in the US, the US population contributes more than $400 billion a year for charitable giving. $400 billion a year in charitable giving. South Africa, the number isn't at the same level, but the point is it's a huge market, sometimes neglected and overlooked by accountants, and there's such an important role that you can play in improving measures like these to, especially now with the recession, to make sure that every dollar or every rand that is received is adequately and spent in an accountable and relevant manner. There isn't really any fat left in the system. Everything must be spent as intended, and there shouldn't be any leakages. Next slide. So that is what we intend with the summit. How can we reduce fraud, and how can we increase the appetite for giving? What we found, we have a very nice project running with the Department of Social Development and assisting the social sector. But what we've seen is that international donors specifically do not want to donate to South African charities in the same volume as they would do in other jurisdictions, because most of our NPOs with the DSD aren't filing their annual returns. So if you're not compliant, you can't get funding. So we are deploying our volunteer army to assist NPOs, all 200,000 NPOs, about 80% uncompliant, to make sure that they can file an annual return and can continue to receive government funding. But more than that, to build a new platform for NPOs, we're busy with a project with the DSD to do that, so that we can supercharge the ability of NPOs to collect and account for the money received. But then if we want to increase the volume of donations, we need to decrease the amount of fraud in the system. Next slide. So we did a brief survey in anticipation of the summit on LinkedIn. Quite a number of people viewed it, and we have good responses. And this is in some of the proposals we made to SARS that we want to make sure are accurate by having this summit. How can we all work together to prevent tax evasion within the sector? We made a suggestion, and we then asked the market what is their views. Should Know Your Client be mandatory for tax practitioners? In other words, adding a working paper to do a type of financial intelligence Know Your Client analysis. And 28% of participants supported that idea. Deploying of artificial intelligence to track receipts. There are a number of providers already out there, and we're working closely with some of them to see if we can link, it's not an RIF or RID signal, but it's something similar to track an invoice or an expense, receipt or invoice as it goes through the system, so that it isn't duplicated and correctly allocated. So if it's generated within the financial reporting supply chain from one entity and it flows to the next and the next and the next, we think that there is a possibility that if we apply our minds correctly and cooperate with SARS, that we can deploy such a technology, and 23% of people agreed with that. Full financial statements audit, it's a contentious issue, at least for us. We have a particular view about the value and benefit of an audit. There is benefit, but it's not a solution for all South Africa's problems. It's really an issue that we find with government when we engage government departments and some businesses, that they think if they just require an audit of financial statements, that they'll stop fraud. When in fact, if you read the audit standards themselves, they say it's not designed to detect fraud. So it's not the answer. And that's an oversell from special interest groups. We believe that it's not the answer. At SAIBA, we believe it's context specific. It's just like medicine. There can't be one medicine for everybody. Each person is unique and individual. So there should be individualized medicine. There should be individualized education to cater for each person's personality type. And then we thought, but why shouldn't they be individualized and context-specific audits? Which we've made some suggestions to various authorities. We think IFRS is a good thing. Audits is a good thing, but it's kind of run of the mill now. No? It's like you can't sell a car without the wheels. Most cars now, all cars have wheels, and most cars are now high quality. So it's kind of done. What's the next frontier? And for us, that is context-specific assurance solutions, looking at the actual risk area, and then agreed to by the stakeholders as closest to the risk area, instead of this one global thing that we prescribe within the Companies Act and then think it will solve our problems. But 28% still said to stop tax fraud at the NPO sector, there should be full audits of financials. And then lastly, the bookkeepers play an important role. Each NPO uses a bookkeeper, either part-time or full-time. And on considering the issue, it might be that tax fraud can be stopped by just training bookkeepers better. In other words, do we give bookkeepers a chart of accounts? Do we require them through legislation? SARS can require this. If you prepare your set up a bookkeeping system for an NPO, it has to have the following chart of accounts. In most instances, and I'm sure you would agree, if you run your practice, you would know that the quickest way to get the client's books done is just selecting the template chart of accounts, and then everything is income and everything is expense, when in fact there should be better management accounts and better structured accounting journal entries linked to better charts and sub-charts and explanations of why you allocate certain money. Yeah, and if we can get bookkeepers to do that, then we will remove ignorance and we will remove inefficiencies, and there will be better reporting to SARS. Next slide, please. So then in summary, before we start then with our actual presentation from our stakeholders, we need to understand regarding Section 18A, it allows for professional judgment relevant to circumstances. It accepts that a suitably qualified independent person can perform appropriate work involving less than 100% detailed testing. That's just a way to say, listen, make it contextual. You don't have to test everything. You should just analyze closely the flow and the circle of transactions. And then from invoice origination until it ends up in the report that you have to file to SARS, and you break this down into its little elements, and then you start fixing each one, then eventually the system works. So it's not, you can't use a poor system or a broken system and then think an audit will fix that. The audit is the last thing that's capable of fixing the system. And then this is then also our proposal that we sit together with our partners, understand the real problem, and then come up with a workable and practical and cheap and affordable solution for the market, that won't require additional regulation. Next slide, please. All right, so now I'm going to hand to our speaker from SARS, Holoko Sekosana, and he's from the tax exempt unit, explaining to us more about Section 18A, how it came about, what's the intention with 18A, and hopefully share with us some of the bad experiences SARS have so that we can collectively respond and provide a supportive solution. Thanks again to SARS, and over to you, Holoko.
Thank you very much, Nicholas, for that introduction and for pronouncing my name correctly, Holoko Sekosana. I am from the SARS, the tax exempt institutions, which is a team in SARS that looks after the tax exempt institution, as the name says. So basically our work involves doing research, analysis, and benchmarking with other tax jurisdictions, how to provide a better service to the tax exempt institutions. Our work involves setting a strategic direction as to how SARS should approach this segment of taxpayers, take into account they are very unique. Having said that, we have 2 surveys that are currently out in the public. Those surveys, they aim to measure how our taxpayers within the segment understand their obligations, how well they understand the information that is out there, that is aimed at assisting them to meet their tax obligations. And the second survey aims to measure how easy or difficult they perceive it to be when they have to interact with SARS using various channels in the segment. And our learnings from that, we are going to be using to try to improve the experience that they receive from the organization. And I must say that we do enjoy working with various stakeholders to improve the tax ecosystem for the tax exempt institutions. And that is the reason why we welcomed this engagement today. Nicholas mentioned that the governance procedures need to be tightened within the NPO sector around Section 18A, as well as the use of NPOs for terror financing and money laundering activities. And yes, there have been findings relating to terror finance and money laundering, and South Africa has been found wanting, and it's at the risk of being grey listed. And there is a recommendation 8 that specifically deals with NPOs that basically says that the NPOs were found to be vulnerable and at the risk of being used for money laundering and terror financing activities in South Africa. So a multi-agency task team has been set up to address the findings and the recommendations of FATF. And there are a number of engagements that are actually planned for various sectors, including the NPOs, in relation to FATF. So our presentation today is not going to be on FATF, it's going to be around Section 18A. We're going to have an overview of the requirements and the new developments. So as a bit of a background, without any further ado, Section 18A came about as a result of government recognizing that a number of organizations in this segment rely on donations from the public, and to encourage that generosity from the public, the government has provided for a tax deduction for certain donations made to those organizations, and the eligibility to issue the receipts, tax deductible receipts, is obviously restricted to certain approved organizations that carry out certain public benefit activities that are listed in the 9th schedule to the income tax. So currently, SARS has got a total of 62,000, just over 62,000 tax-exempt institutions, and 32% of that, which is about 30,000, are approved Section 18A institutions on the register. And if you look at the makeup of the 29,000, if you look at the makeup of that, you'll find that 5% of them are funders. They fund the doers, and 95% of them are doers. So the funders are basically those that provide fundings to the others that conduct the qualifying activities. The requirements for Section 18A for approval, as well as continued compliance and reporting, they are mainly provided for in the Income Tax Act, and the information to actually retain the information relating to the Section 18A receipts that have been issued by the organizations that are approved for Section 18A to be provided to SARS as and when required. They are contained in various sections of the Income Tax Act, which is Section 18A2A, Section 30, and there are general administrative provisions also in the Tax Administration Act. I will try not to bore you too much with the detail today, because I have a number of slides. This is just to create an awareness of what is what one needs to take note of in terms of Section 18A. So there are obviously some restrictions that relate to Section 18A. And the first of all being that not all donations will be eligible for Section 18A deductions. We'll mention that later in the presentation. And there are certain donations that are excluded, of course. And not all tax-exempt institutions, as Section 18A is only applicable to certain qualifying tax-exempt institutions. Not all activities, obviously, because there's those that have been selected that may qualify an organization to obtain a Section 18A receipt in line with government policy, because essentially, when government has identified those activities that are a pressing need for the country, and to help the organization obtain funding and to sort of indirectly co-fund this organization, because when a donation is made and someone goes and claims against the fiscus, government is not, the person that is making a donation is not donating 100% to that organization. Part of it will be co-funded by the government indirectly. So it can't be all activities. It will be only those activities that are a priority for government at a certain point in time. And currently we have them listed in Part 2 of the 9th schedule. And Section 18A is territorial in nature, meaning that the funds can not be used, Section 18A funds cannot be used outside of the country. They should not. If any organization is using the funds that were obtained by issuing tax deductible donors, which in turn will be claiming those against their taxes, if those funds are used outside of the country, that will be a breach of the Section 18A provisions, and there can be penalties to the organization for that. And Section 18A is not retrospective in nature, so it's only applicable from the date that has been confirmed by SARS in the notice that will be given to the organization. So, looking at the donation, what types of donations that are eligible for Section 18A?
I see that we've just lost Koloko. Is you back?
I am back. Apologies for that. I lost connectivity.
No, it was just, I think, a glitch in the system. So welcome back. Please continue.
Thank you very much. Can you confirm that you can see my presentation?
Yes, it's very clear to me.
Thank you very much for that. As we're talking about donations. So there must not be any conditions that are attached to a donation that is made to an organization. And the donor typically cannot attach any conditions or use that donation to direct how the operations of that organization should be, what should be done with the donations, and they cannot direct the operation of the donation. So if any consideration is given by the donee back, even in the form of advertising, that will not qualify that as a donation. So there can essentially be two types of donations, cash and property in kind. Important to note is that the donations must be made in the year of assessment for which a tax deductible receipt is issued. So if we are talking about cash, it should have been received by that organization in that year. So it can't be a promise. There can never be a Section 18A receipt issued for a promise. If it's property, and that property is transferable, that it needs to be transferred and registered to that organization, that must have been done in that year of assessment. So in other words, if it's a fixed property, that organization must be the owner of that property by the end of that financial year for that to qualify as a donation. If you're looking at cash donations, they will include your EFTs, payments by credit and debit cards, or even postal orders. They will exclude such things as fundraising proceeds, memorabilia or assets that are donated to the organizations to be auctioned, school fees, amounts paid for successful bids at auctions, membership fees. Even if the organization is receiving free rent from another entity person, the value of that rent cannot be regarded a donation. So the list is not exhaustive. It's found in our guide also for more examples. And when you're talking about property in kind, it would include certain financial instruments. Basically, if it's a share that is in a listed company, or in certain credible financial institutions that will be issuing those financial instruments that can qualify. as a property in kind, trading stock, assets, property purchase, and so on. Important to note that there's a formula to determine the value if the market value of the immovable property exceeds the cost of that property. But I'm not going to go into detail, but there's a determination of that value is provided for even in our guide, even in legislation. And the responsibility of the organization that is receiving the donation to ensure that the correct value of that property in kind is actually included in the receipt. However, the donor must be willing to work with the person receiving the donation to ensure that they are actually providing a correct amount there in order not to pressurize the donee should they be audited and an asset that is close to deterioration has been given and a value in the receipt that is not in line with that formula. So this is where the accountants can come in and actually try to assist these organizations to ensure that the correct value is determined for the purposes of property made in kind. That would exclude their fiduciary rights, usufruct or other similar rights, intangible assets, and yes, there are non-qualifying financial instruments. A share in an unlisted company cannot be regarded a property in kind, for example, and a service by intent, for example, to this organization, pro bono service, the value of what would have been charged to any other paying person cannot be included on a tax deductible receipt as a donation. There are certain entities which may qualify, which may be considered for Section 18 approval, and they include a PBO, that is basically a public benefit organization that is conducting Part 2 activities listed in the 9th schedule. And there's a public institution that's essentially an entity that has been established by Government Gazette or can be seen as a public institution that is registered under a certain act like a university, and so on, but it also has to conduct Part 2 activities. A conduit PBO, which is a PBO that provides funding to either another PBO that has been itself approved for Section 18A, or a public institution, or even government. The most important thing is that that funding must be provided to either of the three entities must have themselves been approved for Section 18A and conducting Part 2 activities listed in the 9th schedule. The latest addition in the Act has been to include also government to qualify to issue tax deductible receipts for Section 18A, because we found that even with COVID, there were organizations that were assisting government during the COVID era to address the pandemic and so on with funding, and so that we had to cater for that. And I will not talk much about the specialized agencies as defined in the Diplomatic Immunities and Privileges Act and certain UN or international entities. Those are named in the Act and even in our guide. But for the purposes of this session, we will not go into much detail. We'll focus strictly on PBOs, because NPOs, when they apply for tax exempt institutions, qualify as a PBO unless it's a recreational club, which is one of the entities that may not apply for Section 18A to issue tax deductible receipts. So those organizations that may not issue the receipts are branches of foreign exempt organizations. Although these organizations, the branch of a foreign exempt organization may be approved for tax exemption in this country if it conducts the public benefit activities, it may not qualify for Section 18A. It will not even be considered because it's not a qualifying entity type. And non-approved organizations obviously cannot issue Section 18A receipts if they've not been approved, even if you may qualify, but in the absence of an approval or a notice from SARS in the form of a letter to tell you that you have been approved from a certain date, you cannot issue Section 18A receipts for your organization. And I've mentioned recreational clubs. Those are the tax-exempt institutions. Even if they've been approved as tax-exempt institutions, they cannot be considered for Section 18A purposes. Those are recreational clubs, membership associations, small business funding entities, homeowners associations, companies owned wholly by public institutions. For example, those cannot be considered for Section 18A purposes. There are certain public benefit activities that are listed in the 9th schedule to the Income Tax Act. Those activities that will determine which organizations are actually considered. If it's a qualifying entity type that was mentioned, if it's not a recreational club and it's conducting the activities in these categories, which is welfare and humanitarian, healthcare, education and development, conservation, environment, welfare, and certain land and housing activities, that organization may be considered for Section 18A purposes. But there are certain activities within these categories that need, before an organization can come to SARS and say, we are conducting this activity, we want approval for exemption, and we also want approval for Section 18A because the legislation does allow me to get a Section 18A status if I'm conducting this activity. And so please give us the Section 18A status. SARS will say no, because they require certain ministerial regulations to be published first before it can be considered that you are actually conducting that activity. So there's basically 3 of them in the legislation, in the 9th schedule currently, that require those regulations. And one of them, which is the provision of scholarships, bursaries for study, research, and teaching, has actually the relevant regulations published in the Government Gazette. And we have been approving organizations, SARS has been approving organizations that are actually conducting that activity. So 1 can get exemption for that activity, and 2, that organization can also get Section 18A status. But when it comes to the granting of loans, particularly to emerging micro enterprises, it's stated as one of the public benefit activities in the 9th schedule, but we are still waiting those provisions, those ministerial regulations to be published, because to indicate how you are to be conducting those activities before it can be said that you're actually conducting them. So granting of loans to emerging micro enterprises and the provisions of loans for study, research, and teaching, those regulations are still being awaited. So organizations have been trying to obtain approval for the it's a bit of a difficult position for SARS and the taxpayer, because there are no regulations that are required by legislation yet. So I just wanted to caution on that. And there are certain prescribed requirements for public benefit organizations to obtain approval and to retain their approval, continued approval for Section 18A. So there's a ring fencing requirement if the organization is conducting both Part 1 and Part 2. The difference is that Part 1 is generally what can qualify an organization for exemption purposes to be classified as an exempt institution in SARS. You have to be conducting anything in Part 1. And in Part 2 of the same 9th schedule is basically taking some of the activities from Part 1 and saying, as government, and in line with our policy currently, these are the activities for which government is directly fund the organizations. We'll give some of the money back to the donors while the organization is still receiving 100%. So if organization is conducting both Part 1 and Part 2, it can receive a ring-fenced approval. And there's also the requirement relating to the use of Section 18A funds. So if an organization, a public benefit organization, receives funds from a conduit PBO, it must strictly use those funds for Part 2 activities, and it must use those funds in South Africa and not outside of South Africa. And for conduit public benefit organizations, the approval, although in Part 1 of the 9th schedule, you may obtain exemption for providing funds, assets, services, and other resources. So there are 4 things other resources to an organization, you can qualify for exemption. But to be considered for Section 18A purposes, you need to be providing funds or assets only. So those will be what qualifies a conduit PBO for Section 18A purposes, not a provision of services or other resources to other public benefit organizations. And there's, in relation to conduit public PBOs, there are distribution requirements in that an organization is expected to distribute or undertake to distribute at least 50% of all Section 18A funds within the next 12 months period. And this, if an organization also wants a waiver of that distribution requirement, it has to make a case to SARS apply, and which that obligation may be deferred after the commissioner considering certain factors that are in the public interest and the reasons for which those are actually, the waiver is actually being requested. For example, a capital expansion project for an asset or property that will be used in Part 2 activities. So in those instances, a waiver can be granted. And relating to investment of Section 18A funds, amounts not distributed after in the 12-month period, the other 50%, or if 60% was distributed, 40% may be invested, but prudence, integrity, and reasonable care must be applied by the office bearers in the investment of those funds. It can be anywhere, but the investment must never be intended for the self-economic interest of any of the office bearers or any person, or it may never be regarded as an indirect distribution. So it must remain exactly what it is, an investment. So the proceeds from the investments of the assets held, they must be distributed within 6 months after every 5 years. So when we say proceeds from investment assets held, we are not referring to the proceeds from the actual resale of those assets, where, for example, the proceeds from the resale is going to be invested in other assets. We're talking about the income from the investment assets. So there's also a ring fencing requirement for conduit public benefit organizations. If it provides assets to both Part 1 and Part 2, it must limit Section 18A funds to Part 2 activities, those organizations that only conduct Part 2 activities. There's the requirement for an audit certificate. And for that requirement, for a full discussion on that requirement, we have interpretation note 112, that is titled Section 18A Audit Certificate. If one wants to know more about the requirement, please feel free to go onto SARS website and download the interpretation note. So in summary, the PBOs that are conducting a combination of the public benefit activities listed in Part 1 and Part 2, those with ring-fence Section 18A approval must obtain an audit certificate to confirm that the donations received from Section 18A, issuing of Section 18A receipts have actually been used solely in carrying on Part 2 activities in South Africa. But if a PBO is carrying only Part 2 PBAs, in other words, there is not a ring-fenced Section 18A approval that was granted, it is not required to obtain and retain an audit certificate. So the same applies for conduit PBOs that are providing funds to PBOs, public institutions, or government that carry Part 1 activities, as well as those that carry Part 2 activities. It must retain an audit certificate that will assure SARS that the funds were only distributed to those that conduct Part 2 activities in South Africa. And then the audit certificate must further confirm that all the donations received during the year of assessment were distributed as required, in line with the 50% requirements. But the same applies with the conduit PBO. If it's providing funds to qualifying entities that only conduct Part 2 activities that have been approved only for Section 18A because they conduct Part 2 activities, they are not required to obtain and retain an audit certificate. non-compliance by Section 18A approved organizations, there are instances that can cause the tax, the Section 18 fund, the value of the Section 18A funds received by an organization to be deemed taxable income in the hands of that organization, and also to disqualify the donations made to by the donees as a deduction in their own returns. And those are listed there. That is essentially when the office bearers fail to ensure that the organization, the funds are used for the objects of the organization as per its founding documents, and they expend monies for purposes and that are not in line with its founding document, and issue a receipt for salaries or anything else that is not basically a donation, as we've seen what donations are, and basically issued contravene the regulations of Section 18A and applied the funds for Part 1 activities and not Part 2 activities. And if it's required to obtain and retain an audit certificate, they failed to do so. So SARS will basically, by means of a written notice, direct that those funds are taxable in the hands of the PBO, and then disallow the donation in the hands of the donors if no corrective steps have been taken. And when non-compliance relates to the fiduciary responsible persons, that is in most cases the office bearers of the organization. So a fiduciary responsible person is defined as a person responsible for the management or control of the income and assets of an organization, and they fail to comply with any provision of Section 18A or the founding document of that organization to the extent that it relates to Section, they'll be guilty to an offense and conviction and liable to a fine or imprisonment for a period not exceeding 2 years. We have a recently published basic guide to Section 18 approval issue 4 that was published in August 2022 on the 18th, basically last month. With regards to the latest developments, what SARS has picked up and what informs the need to actually strengthen control around Section 18, but not also the control measures, but also to make the lives of our organizations and taxpayers, the donors themselves, a little bit easier, is the fact that SARS has actually identified the misuse of PBO registration numbers, and that has resulted to the loss to the fiscus and the broader sector in their need of funding. Because if one donate but they claim a receipt, that is funding that could have went to that organization. So SARS had to discontinue the publication of PBO numbers on its website. So we're only listing those approved organizations now by name. And the donors were unable to verify the status of a PBO. They're only using the name now because we've had to take that out. So there are entities that are not approved that were issuing Section 18A receipts that are not valid. There's falsification of Section 18A receipts by certain unscrupulous persons out there, syndicates that are actually helping people to claim fraudulent deductions, Section 18A of which is amongst those. And there are employers that could potentially be claiming payroll giving without having paid money over to the receiving institution, but they make the deductions from their employees. So SARS has actually enhanced risk measures to prevent disallowable or fraudulent claims. And this resulted in additional reporting burdens to Section 18A entities when approached by individual donors or auditors during SARS verification audits. So because of the enhanced risk, when we pick up that this PBO number is not valid, or a donor has mistyped the PBO number or maybe swapped the digits, you find that there's that back and forth between the organizations and the donors, and there's now this inconvenience. So as a result, SARS' response was to protect the PBOs and institutions from fraud and misrepresentation, try to make it easy for donors to claim receipts without compromising risk mitigations. So we've had to basically include a new IT3D submission process. So which means that we, as SARS, we are now making, instead of just waiting for the donors to come and try to claim on their returns, we want to now pre-populate, get the organizations to submit their third-party returns to SARS in order to pre-populate the donors' returns without the donors having to do that themselves. The donors can only now just confirm if the information on that is the plan going forward, that they should only confirm if the information is correct and accept it or make changes. And that takes away the risk of typing incorrect PBO numbers and having to go back to the organizations to say, no, my PBO number has now been disallowed. My donation of R1 million, I cannot claim it now. And that inconvenience, that trust between the donors and the organizations to diminish. To just try to counter for that, SARS is now coming up with an IT3D submission process. And there has been an introductory session where organizations were invited that were varying in size, volumes of Section 18A receipts that they are issuing, and as well as different entity types. It's an ongoing process. And even today, we've got an industry feedback session relating to that platform. We've also had to change the legislation just to be able to prepare for this platform. Basically, this is to add some of the information that is required on the receipt, some of which will include ID numbers or company registration numbers that will be able to enable us to link the number, the donation to the donor, if the donor is now claiming to be for the purposes of pre-population and all of that. So the wording under Section 18A2 has to be expanded to enable SARS to request additional information from the organizations for the purposes of this platform. So that third-party submission platform is actually aimed as a further measure to prevent Section 18A abuse, and is intended to have the benefits of protecting the Section 18 approved institutions against abuse, reduction in undue tax revenue leakages for the country, and to also pre-populate the returns with correct 4011 amounts, code 4011 amounts obtained directly from the organizations, which will result in reduced administrative burden. The back and forth between the organizations and the donors, they don't having to go back to the people. My donors are not getting a deduction. We're trying to do away with that. And also to lessen the administrative burden and on those organizations that have to assist donors during verifications and audits. So the intended implementation approach of this Section 18A third-party returns, which with the use of an IT3D form, is aimed at government spheres which have been approved, public institutions, public benefit organizations, and any entity that has basically been approved for Section 18A purposes. They will be required to make use of that channel. And SARS is considering a differentiated approach for different types of organizations to cater for the different types of sizes and complexities. We cannot treat a small PBO the same as a large PBO. It's on the administrative systems that are applicable in a PBO, small PBO, as well as a large PBO or a large entity that has been approved for Section 18A purposes. There must be different platforms that are available that are relatively easy to use according to the level of complexity of an individual organization. So having said that, there are different submission channels that are envisaged, which may be used depending on the number or value of Section 18A receipts issued per annum. There will be a phased implementation of that, and SARS will continually be working with stakeholders. It's not necessarily pre-selected stakeholders. It is going to be a requirement of the industry at large, but further details will be in the session that relates to the feedback on the IT3D submission, but it will be with the industry at large, and all taxpayers are actually encouraged to start familiarizing themselves with the process and the publications that will be out domain in due time to actually prepare them for a full-on implementation in the later phases, because in 2023 we're starting with phase 1 and so on. So any entity that wants to pace itself may as well, even the accountants, auditors, may as well start familiarizing themselves with that. So this was actually informed by a pilot project between SARS and the Solidarity Response Fund. I think we are all aware of the Solidarity Response Fund. So we worked on a pilot project on a similar submission to what we are envisaging for the industry at large. So the result of that is that we were able to identify the fields that are actually required, or the information that is required to enable that third-party submissions and validations for the successful implementation, and the identification of the shortcomings with informed SARS and Treasury's decision to make some legislative amendments. And there was ultimately a successful exchange of data between SARS and the Solidarity Response Fund, which SARS is now ultimately expanding to the rest of the segment of taxpayers that are approved for Section 18A purposes. So the channels that are envisaged in phase 1, we've got those basic, where you can simply capture and submit on SARS e-filing, where you can just attach anything that was created using a spreadsheet for 20 records per submission on e-filing. And then it gets complex according to the number of submissions. We've got HTTPS. If there are any technical persons here, they will understand what we're talking about, but it involves anything in excess of 20 up to 50,000 records. There's an IBM Connect Direct for 50,000 or more. In a later phase, SARS is also aiming at what we call an API, which is a bit of a live type of a platform, but a real-time type of a platform. But this is not obviously intended for an organization that does not have the capability to build to have that kind of a system in place. So there's quite a number of options that are being considered to even make it easy for even the basic taxpayer to do the submissions if required to do so. The data fields that will be required, the existing Section 18A information that was in legislation before it was amended. So that included like the date of receipt of donation, the name of donor, address of donor, amount of donation, age of donation, and so on. And then the additional information that was identified during the pilot projects with that one organization was identity in case of identification, in case of an individual or company or trust registration number, and identification type in case of an individual, country of issue, date of birth that's relating to an individual. Basically, the generic information that will make it easy for SARS to be able to match the donation and the donor who's claiming the donation on their own return. A lot of concerns were coming from the public to say that some persons are actually would like to remain anonymous. But the argument has always been that if you are going to remain anonymous and you're not expected to request a Section 18A from an organization, and you cannot claim because the limit you were looking for falls away, because you're even revealing to SARS that I'm claiming this deduction, against this organization which I made a donation to. So nothing prevents you from that organization from telling SARS in advance that so-and-so has actually made a donation to us, and they most probably would be coming to claim that deduction on their return at some time in the future. So it's still the same thing. We're just making it easy for both parties, all parties, SARS, the organization, as well as the donor, to have that pre-population, to have that third-party submission. So that going forward, we would be working with the taxpayers and stakeholders to implement all phases of the IT3D project. Any documentation that we publish in the interim will be a working document. And as much as the public would also be allowed some participation, but it will be a working document, which may change in the future, having been informed by what happens in all of these phases. And there are two notices that will be published. The one relates to the information that needs to be included in Section 18A receipts as per Section 18A2A of the Act, and the one that calls now upon the tax Section 18A approved institutions to make third-party submissions and the timing of those submissions. So one will be issued slightly before the other, but this will still be working documents until such a time that this project has been fully implemented, because there will always be continuous engagement with the stakeholders and involvement to for the learnings of all parties involved. Thank you very much. I will now be handing over to the next speaker, which will be Muhammad Suleiman.
Thank you very much, Goloko. That was quite an impressive presentation, a lot of detail, and many areas that we as tax practitioners can participate in SARS. So please, if you can share that data with us, especially the new guide that you said was issued in August 2022. Now let's move on to our next presenter from the NPO charitable giving sector, the social sector, Muhammad Suleiman. Looking forward to how the section is practically applied on an everyday basis by an NPO.
Thanks, Goloko. Thanks, Nicholas. Just confirm that you guys can see the screen, please.
Yes, I can see it very well. Thank you.
Okay. So I'm Mohammed Suleiman. I'm Director of Operations at Gift of the Givers. Obviously, we'll focus on today on how we're managing the Section 18A transactions. Before we start, just like to thank SAIBA for arranging this initiative. I think it's important in the context of the changes that are coming, to have everyone equipped to deal with these changes. Even though we've been dealing with it for so many years, a lot of these issues we take for granted to be understood. And the second one is SARS. I attended the introductory session on the IT3D, and this is a very open approach that they're taking, and they're involving the NPO sector right from the start. So it's been very constructive. So just thanks to SARS and that for arranging these sessions in this format. Very briefly today, we'll cover, who is Gift of the Givers, what we do, the benefits of the Section 18A within the industry, the risk and abuse of the transactions, some general considerations for an effective system, understanding our donors and their needs, how we keep track of those donations, which of those donations to issue Section 18As for, when to issue it, how to issue it, what to issue on it, and then just some general recommendations in closing. Goloko's done a great job of covering, the first couple of topics, so I'll be able to jump through it very quickly. So Gift of the Givers is a disaster relief and disaster management agency. Our primary purpose is to improve the lives of people affected by disaster and poverty. We respond to disasters, whether natural or man-made, anywhere in the world, regardless of race, nationality, location, political affiliation. Where there's a need, our organization will respond. over the last 30 years, we've responded to 45 countries and delivered 4.5 billion rand worth of aid. Outside disaster response, we have projects in hunger, water provision, healthcare, education, and human development. We have official registrations and official bases in South Africa, Zimbabwe, Malawi, Somalia, Yemen, Palestine, and Syria. Each of those are separate legal entities registered in the countries and bound by the, the regulations and laws of the countries in which they operate. Today, obviously, we're focusing on the South African, the headquarters, as well as the founding branch of the organization. In terms of Section 18As, the first thing people, when you ask people what's the benefit of Section 18A, and it goes straight to paying less tax. Why do you need a Section 18A? Because I'll pay SARS less. That's an important part of Section 18A, but for us, it's more a side effect. It's a benefit of doing good. For government, obviously, and why this is important to bring up is people are seeing these changes, or when the Section 18As are being queried, as SARS not wanting to approve these deductions. Why are they preventing us from getting these deductions? And that's actually not the case. I mean, in your opening, Nicholas spoke about the amount of money that flows to charitable organizations directly from government. So government definitely recognizes the NGO sector, the nonprofit sector, as an essential component of service delivery. And they need to encourage donors to support these programs that supplement government's efforts to reaching out vulnerable communities. They are able to use the Section 18A legislation to persuade the effort. So speaking towards the part 2 of the 9th schedule, those activities that qualify are obviously the activities or the areas of concern that government has found to be lacking and wants to encourage generosity and charities to focus in that area. In terms of charity organizations, if your primary purpose is to create an entity to serve the communities, to serve the, uplift the livelihoods of the people around you, we need to maintain the integrity of the Section 18A system, simply because we want that the funds are either going to government to provide these services as a primary service provider to the communities, or it should be flowing to charitable causes, to organizations like Gift of the Givers and others in order to carry out our work. If money is being funneled out of the system and is going neither to government nor to charity organizations, the burden of delivery becomes harder on us, and the funds in which to achieve it becomes less. So we have a vested interest as an organization and as donors and as government to maintain the integrity of the system. Obviously, a well-managed Section 18A process gives you a competitive advantage because your donors want to donate and then forget about it. They don't want to be queried down the line, why is this Section 18A being queried or being rejected by SARS? So very briefly, some of the risks or where the areas of abuse happen with the Section 18A certificates are, some of them are fraudulent, some of them are misunderstood, some of them are down to incompetence, but all of them result in a net negative impact on the fiscus. So Section 18A is being issued without any real donation being made or received. I mean, this is just straight fraudulent transactions that are happening that Koloko spoke to. Legitimate Section 18A certificates being modified. So they could be modified with inflated values, or by changing donor names, by changing dates so that claims could be made multiple times. These are problems that we see where people abuse legitimate Section 18A certificates and then resubmit them to SARS with the aim of getting the tax deductions. There's the issue of duplicate claims or receipts being made for the same donation. Sometimes it's a matter of just mismanagement. Sometimes it's a deliberate fraudulent process. A big issue we find is with the goods in kind, donations that are where the values are, or the value or the monetary value of a goods in kind donation is overstated. So there has to be a system in place to measure the value of the goods, the economic value and utility of those goods in kind. Section 18A is issued for services or rental. These are not, these are clear from the act that it's not allowed to, yet people try to request these type of things. You need to be clear as an organization what you can and what you cannot issue Section 18As for. The Section 18A issued for non-approved public benefit activities, Koloko's covered this already. but just put it there, that is one of the risks within the system. And then the Section 18A is being issued for donations that are dispersed outside South Africa. A legitimate cause, legitimate donation, but the Act doesn't allow for it. The purpose of the Section 18A is to improve the service delivery to South Africans or to people within South Africa, rather, to reduce the burden on the government. So issuing Section 18As for donations that are going to be dispersed outside South Africa is counterproductive. Just some general considerations of making the system work. And it's not just about the administrative process. It's not just about the record keeping. It's not just about how you do your submissions. You know, it's about the education of your staff. It's the education of your donors. It's about getting the buy-in from everybody that's involved. But some simple rules that we have to consider is that we need to keep track of all donations. Yes, SARS has a requirement for us, or it's going to have a more stringent requirement for submitting, you know, the Section 18A donations, but as an organization, you need to keep track of all your donations, whether Section 18A or not, whether cash or kind. We should only issue Section 18As to donors that require it or will have some type of benefit from it. Only issue Section 18As for donations received, not for promises. This one can't be stressed enough. You know, a Section 18A is not an invoice. It's not a request for the donation. It's not a proposal for the donation. A Section 18A should only be issued after the organization has taken complete value, or rather complete ownership of the donation, whether it's cash, whether it's kind. The issuing of Section 18A is only for activities in South Africa and for approved PBAs. I think in general, the smaller organizations, the ones that have very focused activities, shouldn't be having an issue here. But for the larger ones, the ones that focus in different countries, the ones that are focusing on multiple activities, or religious organizations that have both a religious element and a humanitarian element to it, there you will find some of the confusion creeping in. We need to ensure a system that's transparent and auditable. So, I mean, the type of risk that we face could be internal or external. So it could be that staff members are issuing Section 18As when they shouldn't, or it could be that people outside are modifying Section 18As. If a receipt was issued, we want to know at what point in the chain was it modified, by who and why. Was it a mistake? Was it a deliberate mistake? Was it just malicious? We need to have a system in place to go back that allows us to check on this. Also want to limit the number of people within the organization that can issue and approve Section 18A certificates. This is just straightforward good practice in any environment. Limit access only to people that need it, so that when there's something, there's a limited pool to go and look for where the issues have happened. It's part of keeping the system auditable. This one is quite important. Donors are often impatient, forgetful, and lazy, but we need them. And this comes into play in a number of scenarios. Often an organization might issue a Section 18A. Donors receive it, but 2-3 months down the line, when it's time for submission, they can't find it. Instead of going through their emails or looking through it, they just send a fire off a mail to organization. We've given you a donation. We haven't received our Section 18A. And then out of panic or out of worry of upsetting the donor, you just go and issue a new one. We need a system that makes sure that if a certificate was issued, we can go back and check that has it been issued before, or do we require a new one? Sometimes you're dealing with a big company. The CSI team and the finance team don't even talk to each other. So you've issued the Section 18A, it's provided to the CSI team. 2-3 months down the line, the guy from finance is contacting you. We haven't received the Section 18A. You need to find who have you issued it to, what amount was it issued to, and is it the same donation that they're talking about? And then finally, it's not just the receipting. It's not the receipt of the Section 18A where the risk happens. It's also on the disbursement. So if we're saying that Section 18As need to be for public benefit activities within the border of South Africa versus, non-Section 18A donations, then we need to be able to keep track of that as the donations are coming in. They need to be allocated correctly so that it can feed into the organizational budget, so it can feed into the organization's financial plan. So the first part of this is to understand, the donors. So what we find is that not every donor requires the Section 18A. Not every donor has the same needs or wants. So it's important as an organization, not only for the Section 18A transaction, but in general, to understand what makes your donors want to give more? What causes do they associate with? What requirements do they have? Section 18A is one of them. What about SED? What about BEE? What any other requirements that you would, that they have as donors? So with Gift of the Givers, we divide our donors. Obviously, we have individual donors, which we consider, a large number of very small donations. So it's a big pool of donors, but each one of them contribute, let's say, less than 1,000 Rand in the year. But the majority of them claiming a Section 18A doesn't serve any economic benefit. Some of them might request a Section 18A, but there's no reason to issue it unless they require it for their tax submissions. Many of them don't or won't submit tax returns because of the income level, because they don't need to. So why have more Section 18As floating around in the system? The second lot of individuals, which we classify them as professionals or business people, they obviously do take a benefit from claiming Section 18As because the donations are larger. So they'll get the PAYE deductions, they'll get it, they would donate either directly or through payroll giving. So they definitely an element or an entity that requires Section 18As. Corporates and CSIs, I think it's quite self-explanatory there. Other charitable institutions or other Section 18A registered institutions. So these are what we're speaking about, whether they conduit PBOs or also could be partner organizations, that you tend to be working together on certain projects. This one is a bit interesting because what happens is they have already issued Section 18As to the donors, but some of them still request you to issue it either back to them or to the section or to the original donor, which then leads to the risk of duplicate Section 18As being issued for the same donation. And then finally, there's international donors, which could be individuals or organizations. They have no need for Section 18A tax certificates from South Africa. A lot of our foreign donors, we route them to some of the crowdfunding sites. US-based donors can claim their tax deductions against their 501c3. There's no need for Section 18As to be issued for them. To put it into context or to give the idea of Gift of the Givers, within a 12-month period, we process over 50,000 donor transactions, but we only issue about 5,000 certificates. So the 50,000 donor transactions we're talking about cash, the 5,000 donor certificates are a combination of cash and kind. In total, over 12-month average over the last couple of years, the donation value is about 600 million Rand, but only a total of 200 million Rand worth of certificates have been issued. It does show, besides showing the fact that not every donation needs a certificate, you do see that the larger donors would be the ones making the claim because only 10% of the transactions resulted in certificates being issued, but it's for almost 1/3 of the value of the donations. As important as it is for you to understand your donors, the donors need to understand what you as an organization are offering. Again, not only because of the Section 18A, but in general. So who are you? What do you do? What services are you providing to the community? What do you require from them? What are you offering in return? And this is the part that we need to, that our colleague from SARS made clear. There's no quid pro quo when it comes to donations. A donation is non-revocable. It's given fully as a gratuitous once-off donation from the donor to the donee. So there is nothing that you can get in return in terms of economic value. But what are you willing to do as an organization? Will you provide them with reports? Will you provide them with the mileage on social media? Will you provide them with the ability to come and visit the projects? All of those things, including what you won't issue a Section 18A for, needs to be discussed up front so that there's no confusion or complication after the donation is made. You need to explain to them what are you not. It's as important as who you are as who are you not. So you're not a service provider. You are not a retailer. You are not a marketing agency. You are not a conduit for providing other funds from one entity to another. You have a charitable purpose. You're receiving a donation to carry out that charitable purpose. That needs to be clear to the donor upfront. So you set the expectations from the beginning. One of the important things that we always find people are confused about is that because they mix up procurement versus a donation, and all, well, at least in corporate entities, they have a procurement process. That procurement process requires an invoice to be issued for any payment to leave the system. They request a tax invoice. They request a VAT invoice for the donation to be issued. There should never, ever, ever be a VAT invoice for donations that are being requested. Secondly, there should never be a Section 18A issued in lieu of the tax invoice upfront. The Section 18A is only issued at the end of the donation being received. When we spoke about, a effective system, we spoke about that we need to keep track of all the donations. The first step of keeping track of your donations is understanding through which mediums are your donors interacting with you. How are they donating to you? So how many of them donate in cash? Maybe they drop it off at your offices. How many of them are EFT donors? How many of them are donating via credit card? Now you have organizations like the banks and Discovery and ShopRite and them allowing people to donate their rewards as a monetary value back to the organization. People that donate online via your website, and then crowdfunding platforms. Not all of them have a one-to-one transaction mapping into your statement of accounts. So you need to have a recon in the backend that says that for all donations that were done on the website, where is that amount matching into the account? And how do we break it down across the individual donors? What projects do they want it allocated to? How many of them require Section 18As? So this is a manual process. In the accounting system, we have to allow for that. So for someone that has made a donation to Gift of the Givers, which country have they donated it to? Is it for something in South Africa or one of the other projects? And which project do they want it allocated to? Is it for disaster? Is it for education? Is it for hunger? And we need to allocate it accordingly. And then within that, the specialist or the subcategorization of the projects need to be allocated as well. So with basic accounting software, this can be semi-automated because it's a rules-based system, but you still need someone to go back and validate it. So within Gift of the Givers finance team, we have people that this is their job. Every transaction that comes in line by line, they need to go and check and allocate it to the right project. This also speaks to the fact that Section 18As can only be issued for PBA activities within South Africa. So when a request is made for the Section 18A, has that donation being allocated to a PBA activity within South Africa before the actual donation is before the actual certificate is issued for that donation. The second or the other type of donation obviously is donations in kind. So we split this up into two types, ignoring the individual type of donors now, where you get, a very large small donors coming in, dropping off, very large number of small donors, coming in to drop off secondhand clothes or a small hamper or some tin food, focusing on the large ones, the ones that are likely to claim Section 18As. We divide them into two categories. We call them direct or indirect. So direct means that the donor is themselves the owner of the goods or the supplier of the goods. That means they are the manufacturer or the wholesaler or somehow have ownership of the goods and they want to transfer that goods in kind to the organization. What we generally would ask for here is a delivery note or some form of tax invoice that indicates the item as well as the value of those items on the goods, and generally made out directly to Gift of the Givers. An indirect donation or indirect in-kind donation is where the donor is not the owner of the goods. They actually have money, but they prefer not to donate cash directly to the organization. They would prefer to buy the goods and then donate those goods in kind to the organization. So this works in a very similar way. This is not a cash donation. It cannot be issued for the Section 18A as cash because they paid something. Only money that comes into the organization's account will be considered as cash. These will be considered in kind, but need to have the correct paper trail. So what will happen is they would go enter into an agreement with the supplier. The supplier would invoice it to the donor, but the recipient or the delivery would be delivered to Gift of the Givers. Again, proper description of the goods and a proper valuation needs to be given. Once we receive that documentation, we then going to follow up and make sure that the goods actually are received within one of our warehouses, or we've collected it. And then it needs to be checked. Is the item that was promised match the item that was received? Is the quantity that was promised match the quantity that was received? Is the quality of an acceptable nature? So are you getting damaged goods? Or are you getting expired goods? Is there any water damage, or is it insurance damage type of goods that they're passing off as full value? If all of that passes, then we say, okay, the item matches, the quantity matches, the quality is correct, the expiry is correct, it has economic value and utility for the organization. Now it's accepted by us. Let's capture it. And what we'll find is that we'll capture it within our accounting system with the full value of the donation, but marked at 100% discount. So it is goods received without any payment leaving the organization. So we've discussed, understanding the donors, those that would require it. We've discussed keeping track of the donations, keeping track of donations in kind. But the question is, what's the process of issuing a Section 18A? So we get the new donation that comes in. Should we issue the Section 18A? We said it's not always the case. So we should issue Section 18As for donors that could benefit from it. So generally someone that's locally based. So it could be an individual, an entity, anyone that's registered for tax within South Africa that will get a value from it. Assuming that that's true, is it for one of the approved public benefit activities in South Africa? If not, don't issue the Section 18A. If it is an approved PBA, is it cash or kind? If it's in cash, have you actually received the money in your account? Has the donor dropped off cash, or have you received, do you see the money reflecting in your account? Not a proof of the deposit slip, not a request for payment from a procurement system. Is the money actually physically in your account that you can confirm it's there? Up until that point, you don't issue the Section 18A. The same thing for goods in kind. So if it's goods in kind, did it pass the assessment criteria? Is it matching what the donor has said they are providing? Is it, does it have economic utility? Is the quantity matching? Is the quality correct? Is the valuation provided by the donor fair? So if something has an economic value of 50 Rand, is it suddenly be claimed at double or triple that? That needs to be assessed first. Once that's agreed, have you actually received the physical ownership of the stock or the property or the donation that's being spoken about? If not, you wait until that process has taken place. Once that's done, you then may issue the Section 18A. So we've agreed now that something needs to be issued. This donation was received. It's correct. What's the process within gift of the givers? So generally what you'd find is from either the donor or from within one of the offices, you'd get a request to issue a Section 18A. The first question is the vetting complete? In terms of a cash donation, is it for, the process is from the previous screen, is it for donation to be used within South Africa? Is it a pre-approved, is it an approved PBA? Is the money in the account? If that's correct, we can move on. Similarly for the same checks we spoke about for the donations in kind. Then the next step is to validate the donor details. So you received the donation. Was it in the person's individual capacity? Was it in the name of the entity or the company? Is the name correct? So is it their trading name or the registered name that you worked at? You need to validate this information upfront, because otherwise it results in cancelled and multiple Section 18As issued for something that could be clarified quite easily. So requesting that information from the donor upfront in terms of putting in, are you donating in your individual capacity or as an entity? What is the entity name, the actual registered name? Is there a registration number that we could attach to this? Your address, all of those things. You'll see in the next slide. Then making sure that no Section 18A was issued for this before. We spoke about the cases where donors might send multiple requests for the same donation. When all of this is passed, now you issue a new Section 18A. SARS has a very good document on their website that explains what should be put into the Section 18A on the actual certificate. The date, the reference number of the organization, the description of the donation, the donor's address, details, all of those things. After the IT3D introductory session, we started, asking donors to provide their tax number or their ID number or their registration number as well. For the moment, it just goes under the donor's name, but eventually it will have to create its own field. And then the other thing is, I mean, it's old school, but keeping the donation amount in words as well. So it just ensures that, the numbers can't be easily modified by anyone that's wanting to adjust Section 18A certificates. In terms of the database, we spoke about that we need something that is searchable. It is something that can be, we can retrieve previous donations. We can map it against the projects. We can map it against the donor. A simple system can work in that. I mean, organizations automatically think, we need this fancy custom built system for us. A simple Excel sheet can do the job for smaller organizations. Slightly larger Google Docs is, when we made our first transition, we used Google Sheets and Google Forms to create a database. Microsoft, through TechSoup, offer organizations ridiculous discounts. It's affordable for any organization, doesn't matter how big or small, to have a digital IT system at an affordable cost. So we need a system, a digital system, to record this because it makes the speed of processing, it makes the submissions easier, it makes finding the duplicates easier, and it makes finding any errors or mistakes or fraudulent transactions easier. This is basically what you find on the receipts, but you'd have the same thing for Section 18A and non-Section 18A transactions. And then finally, just some closing remarks and advice for the organizations and the practitioners. It's not just about the Section 18A administration. It's about having your staff, having your donors understand the goals of your organization, having them understand what you are trying to achieve as an organization. When they understand that, then they don't see you as someone that, just a Section 18A issuer. They need to be aligned with the goals. They need to be aligned with you as an organization. Then everything else falls into place. It makes the next step easier, educating them on the Section 18A process. Donors can be insistent, we want to donate to you and we want the Section 18A. They need to understand when it can be done and when it can't be done. So how does Section 18A, how does BE, how does SED policies fit in? How does it fit into the context of you as an organization? You need to be firm in enforcing the rules. The moment you start creating exceptions for large donors or to just get that one donation that you need, you open a door that, it becomes very difficult then to manage the system and maintain its integrity. It's easier when things are written down. So having those donor engagement guidelines, which includes issues of Section 18A, it includes the procurement process, includes your reporting guidelines, so that people can understand what you are, what you're offering, and how you're going to engage with them. And then digitize, we've spoken about this already. And then with the accounting practitioners, we need to understand that charitable giving isn't all about Section 18A. It's about the best return on investment. It's about doing the most with the little resources that we have. So choosing those right type of projects, choosing the right type of investments in the social field, engaging with the CSI and CSR divisions, not just their finance teams. The person that might be the one making the decision to donate isn't the one that understands what goes on in the background. What requirements there are in terms of tax, what requirements there are in terms of Section 18A claims. So as accounting practitioners, don't limit yourselves to dealing only with the finance team of companies. You need to be talking to the people that are making decisions on the donations. Then it's the issue of performing upfront checks and vetting on the organizations. Understanding that a PBO and a Section 18A approved entity are not the same thing. You don't want, because someone's a PBO, they cannot necessarily issue Section 18A receipts. Make sure that you've understood that upfront, that you vetted the organization upfront, that everything else is in place. So you're not forced to make, bad decisions come tax return time. And then the last one is don't procrastinate. And I think this is one of the good things about the system proposed by SARS, is that it's almost live. Everything is going to be updated as and when it happens, rather than waiting for tax return season. So donors give you a donation now, and then they ask you for the receipt in 9 months' time when they're actually doing their return. then they can't find the proof of payment. Then you're not sure if you issued it. You're not sure if, you know, there's too many what ifs that happen. Whereas if it's done at the point of the donation happening, then there's no pressure on yourself as the donor. There's no pressure on the practitioner. There's no pressure on the charity. So we're less likely to make mistakes when we do things on time. I think that brings me to the end of my session. I think next up is Rian from Nedbank. So thank you, everyone, and let me hand over.
Thank you very much, Mohammed. That was quite an informative presentation. Thank you also for sharing some of the inner workings of Gift of the Givers, and as well as the experiences that you have seen. This is exactly the information we as tax practitioners and accountants need. I can already see a lot of benefits flowing directly to the members. Just by setting up a checklist of things to do, I think an important point you made was regard many of these issues are just ignorance or poor system setup. So thank you for that. We'll leave some more questions for the end of the presentation once we're done with Rian, and then handing over to Rian from a risk perspective and a bank perspective. Thank you very much, Rian. I've noted that we're running a little bit behind time, so it's already 12 o'clock. We're very much looking forward to Rian's presentation. So I think we're going to run over until 2020 and then start taking questions. Over to you, Rian.
Thank you, Nicholas, and a warm welcome to everybody on this summit. Just going to quickly get my screen ready for sharing. Nicholas, just quickly confirm, can you see my screen?
Very clear, thank you.
All right. And you can also see my video, hey?
Yeah, I can see your mouse moving, so I'm sure I'm going to see the video.
Yes, Rian, we can see your video.
Okay, good. Well, thank you very much. And thank you, SAIBA, for inviting me to come and talk to you today. I'm going to try and make up some time. So I'm going to go through some of the sections a bit quicker than planned. And then hopefully we can have also some nice questions at the end. So just quickly the agenda. Yes, we're going to talk about the F word, fraud. Not everybody likes to talk about it. People try and avoid the subject. It's not always nice to be confronted with fraud, especially if you're on the victim side of it. So we'll quickly have a talk about fraud. Some important aspects of Section 18A. I'm not going to go back to what the previous speakers already spoken about. Some fraud risks specifically related to Section 18A, and then finish off with the role of the accountant. So the F word, is it a problem? Is fraud a problem in business and in society today? So PwC did a global economic crime survey now in 2022, and their respondents reported that they've experienced fraud to a total amount of $42 billion US. Now, I think we can then very easily answer the question, is fraud a problem? The main perpetrators, the respondents indicated that 43% of the perpetrators were external, 31% internally in their own organizations, and then collusion between internal and external, 26%. So you can see almost 70% of the frauds were committed either by externals and then also collusion between internal and external. In 2020, PwC did a survey in South Africa specifically, and in that survey, 60% of the South African organizations said that they've experienced economic crime in the past 2 years before 2020. Now, I thought of highlighting some of the key findings that's specifically applicable to you as members of SAIBA and in general to the public. And that is that respondents said that 34% of them said that accounting and financial statement frauds were experienced. In 2018, that was 22%, and 34% of the respondents said that there was senior management involvement in it. And that was also up from 2018, when it was only 20% of the respondents. Now, some of the red flags that the respondents provided, when they did a post-mortem of these frauds, some of the red flags were that there were dominant CEOs in those organizations. There was unhealthy board dynamics, inappropriate close relationships between the CEO and the CFO, which usually translates into collusion and the manipulation of controls. Multiple auditors in the group, making it difficult to see the big picture. Expertise of the board is out of sync with the company, and then related parties are not adequately identified. So clearly, also a problem in South Africa when we speak about fraud. Just quickly on fraudulent financial reporting, I'm sure you guys know this, but just quickly, the red flags for fraudulent financial reporting, when there's when management is highly incentivized with regards to the performance of the company, usually in the form of shares, when there's market pressure or shareholder pressure, when there's inefficiencies in the company and management want to hide this, there's also sometimes fraudulent financial reporting. And then a lot of times it's just pure ego or greed on why they have fraudulent financial reporting in those entities. So is fraud a problem? I think we can all agree, yes. Is it a business risk? Most definitely. Fraud can mean the end of your entity, and it can mean the end of your client. So fraud as a business risk should be at least on the top 10 list. And at your organization or your client, if fraud is not part of that top 10 list, you should ask your client or the CFO why. All right. You probably also know this. Why do people commit fraud? Basically, 3 reasons. First of all, there's the opportunity. There's a gap in the controls, there's a gap in the systems, there's no oversight, and there's the opportunity, and they take the opportunity. Other times they rationalize it. That's usually in times when employees are not happy with their increases or their bonuses, so they rationalize it to defraud the company because they feel, well, the company owes me this. And then there's pressures, and we see that a lot in times when there's economic pressures on the staff and general public, and it comes down to the fact that, well, they need to eat. They are desperate, and they need to pay school fees. They need to care for their families, and they then make the decision to commit fraud in order to meet those needs. Right. Just quickly in terms of fraud trends, what we currently see at Nedbank, and maybe just a quick background. So at Nedbank Group Forensic, we are almost 200 people looking after our clients and internally. I'm in a unit called the Specialized Investigations. So we focus on mainly internal investigations, high level, and then also some high risk, high reputational risk investigations, and high priority investigations. We obviously have other teams looking at card fraud, home loan fraud, and transactional fraud. And then our biggest team is the anti-money laundering team, who has that deadline of 15 days in which they have to report a suspicious transaction to the Financial Intelligence Center. So just in terms of trends at the moment, things we see that might be applicable to you, and things to look out for in your daily work is false proof of payments. Clients are defrauded, goods or services are provided before the money is in the bank because they rely on a proof of payment, and a lot of times these proof of payments are fraudulent. Now, if you receive a proof of payment from a client, you can go to that bank's online system. Definitely on NetBank, on a NetBank proof of payment, you can go to netbank.co.za, you go to online banking, and you can verify whether that proof of payment is actually valid. Each proof of payment has a unique reference number. The next one is email hacking. We see that usually with clients using free mail, like Gmail or Hotmail or Yahoo, where their emails are hacked, intercepted. So you receive an invoice, you think it comes from your supplier, but in fact it doesn't come from your supplier. The invoice, the bank details on the invoice are fraudulently changed, and you think you're paying your supplier into their bank account, but in actual fact, you're paying it to the fraudster. Then another big one, advance fee schemes, usually with investments or inheritance, or it's also actually quite known as the Nigerian 419 scams, where you are required to pay a fee to somebody in order to release some form of funds or get access to funds or access to an account. Please don't pay advance fees, and definitely don't pay it in any cryptocurrency, because that makes it difficult for the banks to then assist in tracing where the funds went. Another big one at the moment is SIM swaps and ID theft, and this results in fraudulent debit orders that we are currently dealing with. So if it's part of your responsibility, check the bank accounts on a daily basis. If there's any unauthorized deductions from your account, debit orders, notify your bank. The problem with SIM swaps is that with the new debit check system, if there's a SIM swap on your cell phone, the fraudster will get the notification to approve the debit check, which is another form of, and supposed to be a safer form of debit orders. But if there's a SIM swap on your account or your cell phone, the fraudster will approve that debit from your account. And because of the debit check system, the funds is not always possible to reverse those. On a normal debit order, you have at least 30 days to dispute that debit order, and the bank can reverse that for you. Then in terms of social engineering, that's where the fraudsters try to get access to your accounts, and they do this by phishing. That's when you receive an email. It looks like an email from your bank. You must click on a link, but it in actual fact doesn't take you to the real website of the bank, and then they harvest your login details. Smishing, that's when you receive SMSs on your phone and you think it's from the bank and you act on them. And then vishing is when they use voice, when they phone you. It sounds like a call center. What they're currently doing is they say that there's fraud on your account. Are you aware of it? You say no, you panic. They say that they're going to send you an OTP. You must just approve it, and you think it's from the bank, and actually it's not. So, so yeah, be aware, and when in doubt, contact your bank. Have that relationship with your account manager, and make sure that you are not a victim of fraud on your bank account. In terms of fraud prevention and detection, at your client or at your organization, make sure that they have a fraud risk management plan. They need to prevent frauds happening. Obviously, not all frauds can be prevented, and for that you need controls in place in order to at least detect it. And then you need a plan. If the fraud happens, how are you going to respond to it? Who's going to investigate? What is the action plan? And then, very important, after a fraud has been investigated, the post-mortem needs to include why did it happen, how did it happen, and how are we going to prevent it from happening again. So what controls needs to be put in place, what changes to the system needs to be in place in order to prevent it from happening again, or at least detect it early enough. Then know your client, know your vendor, know your employees. Do those due diligence checks before you onboard an employee, onboard a vendor. Make sure you have the correct details, you have confirmed the details. If you receive communication from a vendor or an employee to change bank details, confirm it directly with the person, your counterpart at that organization, and confirm that they have actually changed their bank accounts. You can contact your bank to assist you in confirming that the bank account number that you've received is actually in the name of the entity that you are dealing with. As I said, confirm proof of payments you received. Avoid the use of free emails. Then, very important, know your bank's fraud hotline. The number or the email address that you can use. Check on their website, especially after hours. All the banks have an after hour call center number or specific email address, because we've found that a lot of frauds happen when you are actually asleep. At Nedbank, we have a team that's 24/7, 365. They're working in shifts in order to identify possible frauds on accounts and take the necessary action in order to avoid the funds from continuing to come out of the account, and to try and reverse the funds before they are actually spent. Then the bank can put a hold on accounts if there's suspected fraud. So as soon as the quicker you can contact the bank, the better, so that they can put a hold on your account. Funds will still be able to come into your account, but there will be no outflows until the situation has been investigated and the matter has been addressed. Then, when there is confirmed fraud on an account, or we have a client that has committed fraud, we offboard them. We don't want fraudsters as part of the banking system. We list them on SAFPS, South African Fraud Prevention Services, so they will not be able to open up a bank account with any other bank in South Africa. And even if it's employees, if it's a bank employee that commits fraud, we also list them on what we call a REDS register, which is a register among all the banks. That's part of the Banking Association of South Africa. And that person will not be able to work for a bank in South Africa for the next 10 years. All right. In terms of Section 18A, I'm not going to say much. A lot of the risks have already been identified by the previous speakers. Maybe just something to highlight. Remember, not all PBOs are Section 18A approved. So don't fall in that trap that you will be able to get a certificate if your organization provides a donation. Go check that they are actually a PBO and check that they have been approved as a Section 18A. Some important aspects. This has also been dealt with. Submission of annual returns. A lot of the SAIBA members might be involved in this process in terms of the annual returns, as well as the audit certificate that needs to be issued. Check the certificates when you receive a certificate, that it's actually a valid certificate, that it's the right name, the right PBO number, a link to that entity. Remember, employees can also donate to a Section 18A approved PBO. They can do that through the payroll system. If your employees are doing this, make sure you get those Section 18A certificates and that they are valid. We've spoken about donations that can either be in cash or in assets. I think you can see that there's the risks involved with regards to assets. Please avoid accepting cryptocurrency as a form of a donation or the promise of cryptocurrency. That's always a very high risk and a red flag. In terms of fraud risks, in terms of scams, this is where the donor is the victim. So this usually happens when there are major events like COVID-19, the Knysna fires, July 2021 unrest, the recent floods in Durban. Through social media, there's then suddenly this flux of requests for assistance, and donors are lured by the fact that they are able to donate and get tax refunds, and then they only find out that these entities are not real registered PBOs, and some of them are not Section 18A approved. When you want to donate, go check on SARS website whether it is actually a PBO registered with SARS and whether they have been Section 18A approved. I've provided the link there to the website. I understand that this is updated on a weekly basis. So before you donate, before your organization wants to make a donation, go check. Are they really Section 18A? And if you donated last year to an entity, don't just assume that they are still Section 18A approved, because these approvals can be withdrawn. So make sure on an annual basis, if you donate, go and check. Then previous speakers have spoken about the Financial Action Task Force Recommendation 8. So this is a very, very important aspect. Please try and put controls in place to prevent that your organization is being misused for money laundering and or possible terrorist financing. The FATF have given the recommendation 8 specifically with regards to non-profit organizations and the measures that needs to be put in place. Right, and very important to you guys, ending the summit, the role of the business accountant. So there are 2 important accountants in this whole process when it comes to Section 18A, and that is the donor entity and the PBO entity. At the donor entity, before you pay any donations, do your due diligence on the PBO. Are they valid? Have they been approved for Section 18A? And the certificate that they're issuing, is that a valid certificate? if you see at your organization that there's suddenly a large unusual amount of Section 18A deductions, that could be a red flag. Ask the questions and get the supporting documents for these deductions. At the PBO entity, the entity must maintain proper control over the spending of the funds, proper controls over the issue of Section 18A certificates, and then, as indicated, very important, the prevention of money laundering and terrorist financing. All right, that was very quick. I hope it wasn't too quick and that you have some time to ask some questions now. Nicholas, thank you. Back to you.
Thank you very much. No, that was brilliant and also quite interesting from a different perspective. I think those, as an accountant myself or in my previous life, what was interesting is the amount of work to summarize all the presentations from SARS, Givers of the Givers, and now Rian from Nedbank, that should be done by an NPO. And the ideal person that can assist them is the accountant. So I hope that everybody that's listened have realized that they have an important role to play. We do get sometimes requests from members saying they can't find clients or I don't have enough exposure. But just listening to this presentation gets me so excited. I'm nearly thinking of resigning and starting my own practice because the need is so big, the problems are huge, and that's what we say at SAIBA. We love problems. The more problems there are, the more opportunities for solutions, the more opportunities for you to, especially now with the grey listing. I think if I were you, it's so in the news. It's on News 24. It's on EWN. It's on Business Insider. So everybody knows about the threat of grey listing, and that is now a trigger. So you can use that as a backstory, right? To and we've heard from SARS there's about 60,000. If I remember correctly, NPOs, half of them are 18As, and Givers of the Givers have shared the volume in their collections from the 600 million a month. 200 million is for 18A that they have to make out those certificates. So there's about 60,000 PBOs, Section 18 NPOs that need accountants, that need somebody to come and look at the systems. They can't do everything, and that's the opportunity. So the more problems, the better for accountants. We can go and fix them. We're going to move over now to a Q&A session. I know we're running a little bit over time. So I've seen that in the chat section, a lot of people have raised many questions. Also in the Q&A. We won't be able to obviously answer all of them. What we will do is go through them, and then after this event, ask the presenters to give us a response. I see, especially in the Q&A section, but I see there were 30 questions. 31 was answered, which is interesting. There's maybe an anti-fraud mechanism necessary in the answers, but it was nice seeing the participation. So I'm just going to close with, obviously you guys can go have a look at the Q&As to see what was answered. Maybe it will address your issue. My question would be for SARS, what is an audit certificate in terms of Section 18A? And then second question, to Givers of the Givers, how can accountants play a more supportive role to the NPO sector in general, but specific to Section 18A? If I can get a response, just 3 minutes of each.
Thank you very much, Nicholas. May I confirm that you can hear me? Okay, thank you. The question is the question to SARS is, what is an audit certificate? To answer that, I can say that In terms of Section 18A, the Section 18A approved institutions that have been approved for Section 18A purposes, but they do both qualifying activities, in other words, activities that qualify for Section 18A, and those other activities that do not qualify for Section 18A. In other words, Part 1 and Part 2. Part 1 doesn't qualify, Part 2 qualifies for Section 18A. If an organization has been approved and SARS realize that this organization conducts both activities, it is the Section 18A requirements requires that that organization must obtain and retain an audit certificate. An audit certificate is a confirmation from an independent person, a person independent of the organization, to say that this organization has used the Section 18A funds on the activities that qualify, on Part 2 activities only. They have not used the funds on activities that do not qualify for Section 18A. In a nutshell, that is what the certificate is. It's a confirmation from an independent person that if you provide it to SARS, it will serve as proof, and SARS will not have to take you through further audit processes. We'll rely on that certificate from that independent person. Thank you.
Thank you for that feedback. And that terminology, just for our audience, doesn't mean a financial statement audit. I think auditing in this way was just used in a very generic form, and that means verifying, go and checking and confirming certain whether the money, the donation was received, and did it actually. And the way would you do it? You would go to the accounting system, and that's where knowledge of the client comes from. Is there an actual accounting system? And as the money flows through the system, did it actually end up in the approved expenses that SARS will be able to allow? So you're welcome to contact SAIBA Academy. We have a nice guide for you on how to do that, and which we'll also share with you after the presentation. Now let's go on then to our next question to Mohammed, and that was for how can accountants better support the sector?
So I think, in terms of the accounting profession, I think they have a lot of work, or you guys have a lot of work in terms of the education and awareness. And that's across donors and the charity organizations. Even if you look at the questions that are coming now in the Q&A, there's a lot of, things where it's not clear enough to people that want to implement it. Maybe for the accountants, it's quite straightforward. And it's a lot of these small things that just need to be put into place that will make a lot of these entities compliant. That compliance will result in less fraudulent tax certificates being issued, that compliance will result in a more reliable, or donors having a better trust relationship with those organizations. That education will ensure that donors know what to ask of organizations to ensure that they get their tax deductions. So I think, especially as SAIBA members, a lot of time could be spent in upskilling and educating both the donor and the donee, in terms of the tax laws, in terms of the Section 18A, and practical steps. It's not about the regulation, it's not about the act, it's important that we have it, but what practical steps can we take to become compliant, one step at a time, as organizations?
I can't agree more. I think that we can close with that, and that is your comment is now. It's not about the legislation. So as tax practitioners and accountants, we sometimes believe that we find our life and breathe the air because of legislation. But legislation is also quite secondary in the life of a nation. There's first the reality, and reality is that there are entities that need donations, and there's entities that need to account for this. And that is what we are addressing. So there's a big real need for your services, separate from legislation and tax laws, to service your entities. And I think that is also much more motivational, and it gives life. Sometimes legislation to me is like death, but we live there, which is kind of limiting. So just to reiterate again what Mohammed is saying, and that is there's reality, and reality is some people don't specialize in what we do, and they need our services. And there's a world of services that we can deliver, and as we're delivering them, we can actually make society better. So SAIBA's coined the phrase, it says, doing good, feeling better about yourself, and all the while making a new client and making friends. So in closing, thank you very much for our presenters from SARS, from Gift to the Givers, as well as from Nedbank. Thank you very much for the time that you spent. I know you are all very busy. And thank you for walking a little bit with us in our little sector of the economy. And hopefully we can redo this to the participants. Thanks each and everyone for your participation and support. If you need any further questions, you can send an email to membership@saiba.org.za. You can contact our academy, and we're always welcome to help. And they say there's only two kinds of accountants in the world, and those that are becoming SAIBA members and those that are already SAIBA members. So you're welcome to join us, and see you at our next summit. Thanks, everybody.